following program's views, claims, or representations may not reflect those of AM 1420 The Answer or Salem Media Group.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive
it was very interesting. There were kids there. There were young people. There were middle-aged people. There were seniors there. I was one of them. And there are people that are like super seniors. And it was so interesting to see. It was such a nice event too. So I was very glad to have been there and taking a look around. I always like to observe anytime there's a big group of people, especially one that's as diverse as that was. And it was just such a nice ceremony. And I didn't get the permission to use their names, so I have to do legally. But anyway, it was just a great time, and I was just watching, listening to people talk, and hearing what they had to say. And it's interesting. A couple of them asked me what I did for a living. Then they started talking about their investments a little bit, very little actually, but that was one of the better weddings, and they didn't want to waste their time doing talking about that stuff. I don't blame them. But anyway, it was a really nice event. Glad I got to participate, and when I get their permission, I'll mention exactly who they were. I can do their first names. It was Ari and Sam. So, but anyway. There was one of the things that reminded me of this was an article that we sent out this week, and it was titled "Couples Embrace the Least Romantic Date Ever, the Money Date." I thought that's pretty funny. I really like this one. Showed up in the Wall Street Journal, by the way. It was September 10th. But anyway, and if you want a copy of it, just email me and I'll send you a copy. But it starts off by saying, to set the mood for poring over budgets and savings goals, Tiara Bates and her husband, Gregory, get dressed in the nines and head to a dinner at a fancy steakhouse. That's actually a really good idea because that is so boring. Typically, so that would be a really good idea because you get distracted by the food and the atmosphere. And then you don't realize that you're doing something that's horribly boring. And by the way, if you have a need for a budget worksheet on a spreadsheet, I have one. I like doing it on a spreadsheet better than using a form of any other kind because you can save the spreadsheet and you can do a month by month. Or you could do a monthly budget and see how that goes for you when you go in and check on the transactions and see how much you're over or under. And you can use that same worksheet each month and just keep using it over and over and put together a little file on your computer on the desktop, and you can save them there. And then that way, not only do you do the monthly budget, but you can go back and compare to see if and when you went over budget, what caused it to go over budget, if you were under budget, what went well for you that month that allowed you to do that. And it's pretty cool. And it doesn't really take a long time to do that either. So if you'd like me to send you a copy of that spreadsheet, just go to my website. It's bullingtoncapital.com. And there's a contact us page there. Or you can just email me, and it's bill@bullingtoncapital.com. And I'd be glad to send you a copy of that spreadsheet. And there's no cost. that article. I thought it was hilarious. Um, let's see. Here's where they go to talk about advisors and relationship counselors. They say couples who go regularly on money dates can better manage their spending, saving, and investing. Since disagreements over money can strain marriages, having regular open discussions about financial decisions in a fun and intimate way can help address any troubles before they become a source of resentment. That's that's a really good idea. I've even suggested clients. This is one of the kind of financial coach. Have the money date in your sexy clothes. At Christine Lucan, a financial coach in Cincinnati. Just go ahead and have it naked as long as you get the money stuff done. I don't know if you'd want to go to a restaurant that way, but yeah, that might be a little distracting even at home. Anyway, Bates and her husband plan money dates throughout the year. In January, they set goals for the year. Then they set up shorter quarterly follow-ups as well as brief monthly check-ins for short-term concerns and week-to-week budgeting. At their August check-in, Bates and her husband visited a local food hall and hired a babysitter to keep the focus on the big conversation, the Bates back-to-school budget. Talking about something as stressful as a school year can bring up a lot of emotion, Bates said, but the money date gives them a specific time to work through everything together, plus doing it with good food and adults-only time makes it more enjoyable. So yeah, I think that's a pretty good idea. By the way, if you want a copy of that article, feel free to hit me up, Bill at BullingtonCapital.com. I'll just send it to you. And I think it's the biggest benefit from doing stuff like this is that you're generally doing something that you enjoy doing while you're doing something that you don't really enjoy. Most people don't enjoy doing it. Some people, but most people don't enjoy doing a budget. So this is very clever. I'm surprised I never thought of this before in my lifetime. But so you take something, if you're at one of your favorite restaurants, you're having one of your favorite meals, and you're just casually going over something like this. And like I said, I've got the one-page budget sheet. You could actually print it out, print out 2 copies, one for you and your partner, and go through the numbers and have a good meal and just kind of make it fun, even like a game. So just an idea. And I know most people get pretty upset these days when they're talking about their investments because the stock market is actually low where its all-time high was from almost, it's about 17 months ago, maybe more like 18 months ago. So it's down 7% from that point, and it had been down 30. So people are starting to get a little more relaxed. But if you invested in September of 2021 and closed your eyes and then opened them up last Friday, you're back to where you started, 2 years. And I get it. But see, I've been doing this for so long. I just know that that's normal. And the vast majority of people, well, I shouldn't say that. Here's what happens. Every year we all get a year older. So every year there's a whole new group of people turning 20, turning 30, 40, 50, 60. Everybody's in a different stage of their life. But they're all advancing. And the vast majority of people are looking at things through their own perspective. And most of the time they don't have access to the kind of information that I have because I have to pay a lot of money for it, number one. You can find other sources, by the way, that are less expensive than the ones I use for a lot of the material that I'm using. The only problem is all the free stuff, you see a ton of ads, and that's why I got frustrated and decided to pay for the information so that I could go right to what I wanted to see. And that works out really well. And but you could find a lot of this stuff online at no cost. The cost is going to be in the amount of time that it takes for you to find a reliable source of data and look it up. But most of this is out there. There's a lot of it's not out there, but at least the general market conditions, they're out there. And I was talking to some my clients there. A couple of them are getting ready to retire. They want to retire over in the next 2 years. They're trying to decide if they want to wait that much longer or not. And so we'll go through the budget. look at the investments, look at how much income they could generate with a relatively high degree of safety, because this is retirement. You don't get to do that over again. Uh, so, and just taking a look at it. So use that budgeting approach, and I don't require that, by the way. If somebody has a really good idea, like I've got at least 5 clients. If I ask them what they spent last month, they know the exact number. I have about 170 clients, so those are and having 5 clients, it's not huge in number, but I put it out there because some people are like that. They got it down. They know exactly where everything is going, and so I can tell you that it's less than 1% of the population that actually does it with that much care. And one of the reasons that we are providing these services for people, for our people that are customers, is we can help them with that. And I can't help you fill in or track your utility bills or what you're going to pay if you live in a city with a sewer district. I don't know what that's going to be, but we can show you where to put that in on the spreadsheet. And keeping up with it, it's just you sit down. Most people will do it once or twice a month and enter everything, and just kind of keep an eye on how things are going. And I'm telling you, the people that do that, they tend to do really well, especially over a long time period. And they also know that when a market's going sideways like this, if they're adding to their investments on a monthly basis, which they probably should be if they're not retired, then when the market's going down, they're buying more shares, because $100 will buy more shares at $50 than it will at $100, right? And when those shares go up, that's a big equalizer. I mean, it actually puts you way ahead of just buying and holding. Some people can't do that, but so we take every situation one by one, and I think it's it's a really nice thing. It's kind of basic. It's been around for a very long time, but like I was talking about earlier, every year everybody advances in age, so your new groups, the new 40-year-olds are coming up, the new 50-year-olds, the new 60-year-olds. Everybody's got a different set of priorities. That's one of the things that's constantly changing too. It's the stories are the same, but the names and faces change. And those new names and faces, sometimes they need a little bit of help. Sometimes they need a lot of help. But that's one of the reasons that I still have a job. And I think it's very gratifying to be able to do this. And that's kind of what I was thinking about at the wedding yesterday. There was people were asking me some questions. We had a couple really good conversations, and it was fun. It's low key, and that's how planning should be. Should be low key. Like that article where people are going out for dinner to talk about their budgeting because they feel better when they're doing it that way. That's great. I think that goes a long way towards helping you do what you need to do, and you can identify what you need to do, and a lower stress environment, and that is a key to being successful in your investments. You've got to be as low level of a stress as you can, or actually, you don't want to go above a stress level that would cause you to lose sleep at night. That's the worst. That's one of the reasons that individual investors have a tough time. The ones that struggle, they're struggling with the fact that they're hoping they're going to be able to predict the market so that they can get higher returns. If you're going to predict the market, you better be predicting out 5 or 10 years, and then you could still be wrong. But when you're trying to predict out over a 1 or 2 year period, and you're trying to predict a big move in a short time period, in a fund or a group of funds or stocks, good luck with that. And it's going to be luck. If you hit it, it's going to be luck. I like to reduce the amount of luck that I have to be successful. As you get older, you don't have as much time. You got to be a little bit even more careful. That's one of the reasons I like the fixed indexed annuities. The rates that they're guaranteeing on those today are extremely attractive. I mean, the rates, if you look at the long-term returns of the average balanced fund investor, according to Dalbar, they're guaranteeing a rate that's actually a couple percentage points higher than what somebody has gotten by what the average investor's gotten. Their definition of average investor. I see some people, they're always, the people that are more professional are semi-professional and spend an awful lot of time doing this. Yeah, you can do better than the average. And they're always saying, well, look at me. Well, yeah, well, see, you're not average. I mean, you're spending 15, 20 hours a week on this stuff, and nobody is. Or, you studied it in college, and you ended up going into a different career, so it still makes a whole lot more sense to you, and you're still spending a lot of time on it. It's just that, and it pays off, and that's good. But the average person doesn't have that kind of time. I think I got to take a real quick commercial break. So this is Bill Bullington. I'm right here on 1420. When we come back, we'll talk about what those guaranteed rates are for a little bit and how tough it is to beat. And if you are going to beat them, what are you going to do? How are you going to do it? So, again, 1420, this is Bill Bullington here every Saturday morning. I'll be back right after these commercial messages.
My first ride-along was with Jamal, even before I was hired. They wanted me to see everything from the ground level before moving forward, and it was awesome. The first time I came in, I got to sit in on a meeting and never realized that plumbers have that level of organization and sophistication to their operations. And I say that as a former degreed project manager as well as an Air Force vet. After getting out of the service, my wife and I moved to Cleveland, and I just wasn't happy with the corporate-style desk jobs. So I prayed for a sign. That next morning, my best friend called me about this radio ad on the Fish for a company he thought would be perfect for me. And he was right. Wyatt Works was a godsend. You have to want to help people. But if you do, this job is fulfilling in ways that the right person won't find anywhere else. If you want that for your life, call us direct and
consider it done at WyattWorks.com.
License number 30185.
Wallackadoodle.
From an idea that started in 1967, Our Lady of the Wayside has grown to serve almost 900 children and adults with developmental disabilities throughout Northeast Ohio. It's an operation that is still growing thanks to tremendous support and generous donations like the Wayside's Car Donation Program. You can donate your ride to the Wayside for a great tax write-off by calling 1-800-368-6262. The Wayside is also looking for people to join their team. They hire for attitude and train for skills. Visit thewayside.org to apply today.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
No longer I who live, but Christ in me, for I've been born.
Well, welcome back. This is Bill Bullington. I'm here every morning, Saturday at 11 o'clock. If you'd like to reach out and talk, have a chat, or you just want to see that spreadsheet that I was talking about, that it's an Excel spreadsheet, got a budget on it. I like to keep things as simple as possible. This is my favorite. Okay, so in that category, this is my favorite. And by the way, guys, I am on a mission now, and my mission is to make the financial planning process simple, as simple as humanly possible. And that's saying a lot, because most financial planners love to bring out a whole bunch of 3 and 4 syllable words and a whole bunch of concepts and go into so many things. I'm just not even sure why they do that. It really turns an awful lot of people off from sitting down and doing the planning. It's not that hard. So again, and where you got to start, the starting place is the budget, the worksheet. Okay, so if you're in your 30s or 40s thinking about, how much money am I going to need to retire? Do the budget first. When you get the budget, then I can tell you, it literally, I'll do it in my head. It takes about 5 seconds. When you've been doing it as long as I have, that's not impressive. It should be 2, but anyway, so, and then once you start getting closer and you start planning for, okay, how am I going to take the income out? What are my best sources of guaranteed income? Because you're going to have a combination of guaranteed income and stock funds or stocks. I'm going to recommend most people do stock funds. The funds have a tendency to do a lot better than individual investors do on their own. And if you can think of an idea, there's a fund out there that's doing it, by the way. There are more funds than there are stocks to invest in. So, and I'm not kidding. I mean, I've seen some of the craziest ideas. I didn't say they were all good ideas, but I've seen some crazy ideas. These funds came out just because they knew that people would invest in them. And the managers, the professionals that are bringing those funds out, it's still crazy, because they know that's not going to make any money over the long run. But it's hot now, so they're just making a product because there's demand for it, not because it's going to be a good one. And that, for a lot of people, that doesn't make sense. And hang around for a while, for a few years, and start taking notes, and you'll see exactly what I'm talking about. So, but I like it because that's exactly what I did. I hung around. I learned how to pick stocks. We didn't have, the computers back in the days when I got started. Holy smoly. Yeah, you couldn't look much of anything up. I think it was probably 2 years before you could look up a financial statement. And these were big firms. Our computer systems cost millions of dollars. And we couldn't get access to information that now you can get. If you have an account at Fidelity, one of the reasons that they're one of my favorite vendors, I have a couple of them that we like, but one of the reasons I like Fidelity is that they give you this research that if you were to pay for it on your own, it still costs you around $1,000 a year, around $1,000 a year, and they're giving you that for free. So I can go there, I can look up anything I need to know about a company, and can show if you. And the next seminar I do, I'll show you how to look that up. And there's a real big shortcut to decide whether or not you should continue looking into a stock based on its valuation. And if it takes you more than 10 seconds after you've practiced for, I don't know, maybe an hour or so, it's because you're goofing around. It's not that hard. And it is a really nice tool, and it will save you so much time if you're a stock picker. Okay? But so somebody remind me of that. Somebody send me an email saying that you said you were going to cover this in your next seminar. I got to pick the seminar date now too, but because I don't want to forget that one. That's kind of a big deal. It helps you see how stocks are selected in the funds, and it gives you a good understanding then of what these fund managers are doing, so you can tell the difference between a good fund and a bad fund. And so that should be a lot of fun. And the fixed investment, the interest rates have gone up quite a bit on short-term fixed income, and I'm looking at the bank rate. They're looking at a 5.4. That's a jumbo, so you have to put a lot of money into that one. Most of them are around 5% or so. Some of them are down to 4.5, but more a little over 5. That's a good rate for a CD. When we buy CDs for people, we shop, and Fidelity is the largest fixed income manager on the planet. At least they were the last time I checked, and they get some really good deals. So that's one alternative. You have to stay on top of that, and if the rates go down, well, that's sorry about your luck. But that's just the market. So people who don't want the chance of that income going down at some point in time, if you're coming up, let's say you're 66. The reason I'm saying 66 is at 67, you get full Social Security. You can take it earlier, but they cut back on how much you get if you start taking it before you're 67. So let's just assume that you have the ability to wait to 67, and you're going to be able to get Social Security, and you got $100,000 that you've got in the bond fund that's earmarked for long-term investment, but it's a bond fund, and it's probably paying around 5% right now. So you could take that bond fund, and if rates go down, that rate's going to go down as well, and the share price is going to fluctuate. The best way to convert a bond into a stock is to put it in a fund. And the fund managers, managing bond funds is significantly more difficult than managing stock funds as far as I'm concerned. And I know a lot of people wouldn't agree with that, but I'm not talking about treasury bond funds. I'm talking about bonds. They're out there. They're buying debt from J.P. Morgan, Chase, Ford, Chrysler. That shows my age. The GM. That takes some skill because, you see what happened when that trader at the bank made a mistake buying the wrong type of bond. Those were government-backed bonds. And he bankrupted the bank. Like, dude, I knew the guy was in his 30s. I knew it. And he just didn't have enough. All the young people get really bad when you say that. And I'm like, well, then stop doing them. Stop making those types of mistakes. You should study history a lot better. That should have never happened. That bank should still be here and should still be healthy. Anyway, so you got $100,000. You're 66. Next year, you're going to turn on your Social Security, and you got $100,000 that you'd like some extra money cash there. If you were to invest that today, Nationwide will give you $6,506. So $6,506. And they will guarantee that amount. Now, if you were only getting 5%, you'd be getting $5,000. Okay. So that's the difference, $6,500, $500. Now, be fair, the CD you put in, you can get the interest right away. So you've gotten the $5,000. This one you have to wait for 12 months to turn it on. So you'll make back the 12 months that you missed in 3 or 4 years. And then it'll be higher for the rest of your life. So when the next recession comes, and this is why I'm talking about this now, these rates have not been this high for a very long time period. If we get another recession, rates are going down. You can bet on it. That economy keeps slowing down. They keep fighting over there in Europe, blocking up all the supply chains. And God help us if something happens in China, the rates are going to drop like a rock. And this does not. It stays at that level for as long as you live. Here's another reason I like this particular product. If I started taking money out, and let's say I put $100,000 in, and the investment goes down, and I haven't withdrawn any money, and I get hit by a bus, and I'm no longer here, they will go back and give my family the full amount I have invested. Try to do that with a mutual fund. It just doesn't happen. It's not available out there. So it's got guarantees for your beneficiaries as well as you. And if you are not taking, let's say you're 64, and you're going to wait until you're 70 to take money out. You're 64, you're going to wait till 70. You'll actually qualify for about $8,500 a year, and that's guaranteed for as long as you live. If you die, you can't get back your beneficiaries. You put a rider on there, and your beneficiaries cannot get back less than you put into it. So if the market crashed, wouldn't matter. They would take a look at how much you invested, how much you've taken out, and they would refund that balance to your family or your beneficiaries, no matter what happened in the stock market. Those are the reasons that I like these particular products, especially when you're looking at bonds and you're looking at interest rates that are more than likely going to be headed down again sometime in the next 12 to 18 months. Why do I say that? Well, because I watch, what the Fed says. And if they keep raising interest rates like this, it's already slowed the housing market down significantly. It's going to slow down the rest of the economy. I mean, it could get rough. So locking in this higher rate now, I think it's a good idea. I just think it's a good idea. And by the way, I bought mine, 3 years ago now. And the rate today is higher than it was when I bought it. But when I bought mine, not all that much, but some I really don't care. But I also know that I know what that income level is going to be. When I get 67, I don't get penalized for taking Social Security. That's what I'm going to do. And by the way, we've got a Social Security analyzer, too, that if you'd like to set up an appointment, I can try to help you figure out what might be the best way for you to start taking Social Security. And here's spoiler alert, if you need it, you should probably take it. Postponing to try to get more down the road, not a good idea. Fill that budget worksheet out, do it without the Social Security, then add the Social Security to it. If you need it to cover your basic living expenses, then by all means, you're going to have to take it. And that's a conversation we have quite often with a lot of our clients. So don't feel like you can't ask those types of questions either, because they are extremely important. And again, I was going back to let's go back to look at another situation. Say they're 66, they could get full Social Security next year. So they put this in, they want to turn it on, and again, they're going to get $6,506. That's 6.5% of what you started with, but it has been on the year. And that's really good. If you waited until age 70, it would be $8,489. Think about that for a second. Wait for a couple of years, they're guaranteeing that. That's on the contract. Doesn't matter what happens in the stock market. Doesn't matter what happens in the bond market. They're obligated. They put that in writing. It's part of your annuity contract. That's a big deal. So that's why I like this so much. It's not that in fact, I didn't start using annuities until about 2 years ago. The time is right for these types of products. Is that you've got more people turning 60 every day in the history of the country. And we're the fastest growing segment. I just turned 60 a couple months ago. We're the fastest growing segment of the population. So it's a big deal. We're getting close. And if I know, I plan on doing one of these a year. And so where I am, 67, man, I mean, talk about nice. It's just mind-boggling. More income coming in, I might even have to get married again. Just kidding. Really. No. But anyway, it's a nice product. If you want to see, I can send you a link to that page where I'm getting this information from. You can put your age in there and see how much income you might qualify for during your lifetime. And very competitive. And again, if you want to, you can come into the office. There's no problem with that. There's no cost. That initial meeting is free. I am going to concentrate more going forward. I mentioned the spreadsheet today. I just got it finished, by the way. I had to make some adjustments to it. And we'll actually start sending those out now. They're ready to go. But we'll get down to some basic planning because, first of all, I think simple plans work better. I know they do. It's amazing that Occam's razor. I don't know if you've ever heard that phrase, but it's a phrase that said the simplest solution is often the best, and I agree wholeheartedly. And I think there's an awful lot of confusing material out there for people that are getting ready to retire, and I'm going to hit this all the time. Here's what you really need to know. You need to know how much in savings you have, and you need to know how much you're going to get in guaranteed income, whether it's Social Security, a pension, maybe you've got a business, or you have a mortgage that somebody's paying you back on. Whatever your fixed sources of income are, you're going to add to minimally 4% of whatever your investment value is, and that's your budget. It's easy to build a budget around that. Well, it may not be if you don't have enough money, but the bottom line is that does not take that long, but you do have to know like how much you need, so that if you're going to come up short, let's say you're coming up a couple $100 a month short, okay, we're going to make some adjustment. What are we going to do? Well, instead of using the traditional government bond, we're just going to use one of the fixed indexed annuities because it pays more than them. That might do it. You just never know. I think I have about 30 seconds left before I have to take a commercial break. When I come back, I'll talk about some individual stocks that had a bunch of requests for that, and it's fun too. And by the way, my method for that, I'll explain it. Very simple. It's worked for an extremely long time period. Not like people want it to work, but if your goal is to be profitable, then you probably want to hang around and listen up. So this is Bill Bullington right here on 1420, and I will be back after these messages.
Still awake, so I picked up a pen and a page, and I started.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year they were back for the master bath. Oh my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
Well, Crab Fest is over at the Lobster Pot, but don't fret, because Clam Fest has just begun. All through September and October, the Lobster Pot is offering their annual clam bake, which includes a dozen clams, a half-baked chicken, a cup of their famous clam chowder, clam broth, red skin potatoes, and coleslaw. Forget this, only $40. And if you want to add on to your bake, choose a filet mignon, a ribeye steak, a live lobster, a 6-ounce lobster tail, extra clams, or a half-pound of snow crab. And it's all available for takeout. And don't forget about the Lobster Pot's beautiful enclosed outdoor patio for all of those beautiful summer and fall evenings. That's Clam Fest, all through September and October at the Lobster Pot. Call now for reservations at 440-569-1634. That's 440-569-1634. Or go to their website, thelobsterpot.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
And I'm back. So we were talking a little bit about the fixed index annuities, which I really like a lot. Most people, well, not most people, I guess a lot of people try to concentrate on what they think is going to be the total return of the underlying index that they're invested in. And I'm just going to tell you guys, I can't imagine the S&P keeping up with the guaranteed earnings on that over the next 5 or 10 years. And I'll actually go through the math. I don't have time to do it today, but I'll go through the math on that statement on next week's show. Or if you want to call me, because the stocks, as you know, they're actually slightly ahead of where they should be. And 2 years ago, they were a lot higher than they should have been. And the economy has grown. The valuations are actually a little bit lower than they were at its peak, but they're still not at a cheap level. So why am I saying that? Well, because you could end up going sideways for 5 or 10 years in a regular stock portfolio. No sweat. So if you don't have that kind of time horizon, you can't wait that long for returns, you probably want to start looking at some of these other products, and the fixed index annuity is the second highest return. The level of safety is significantly higher than most other investments that you might be considering. The only one that's got a higher level of safety than it would be either a CD or a treasury, and they don't pay nearly as much. So that's why we were talking about it. Now, back to the matter at hand. I made this promise to myself and a couple of callers that called in my office and said, "Hey, we like all that other stuff, but we like stocks better. Can you please start talking about stocks?" And so I decided, yeah, I can do that. And so here's what I'm going to do. I'm pulling up U.S. stocks, and then I have a filter that filters it for stocks that are in the top 10% over the last 90 days. They're up more than in the top 10% over the last 90 days. And they're actually up 3% today, or they're up 3% on Friday. And then I just go through that list, and I start looking for those that also have a relatively low price-to-sales ratio. And, oops, that's on the one that I'm looking at now. And where did that go? Okay, not there. This is funny. They've updated my software. Well, it doesn't really matter. I can use this one. I had to write the formulas for these myself, by the way. And here's what I'm looking for. I'm looking for, over the last 90 days, I just want to see those stocks that are in the top 10% of all stocks for performance. In other words, they're up more than 90% of all stocks. Okay? They're in that top 10% group. And I want to see that the volume is above its average daily volume. Why? Well, if the volume's up and the share price is up, that means the buyers are outweighing the sellers. Okay? Now, that changes every day, but it's a good sign when you're looking for something that may come up pretty quickly. The last thing I have a tendency to look for is the price-to-sales ratio, but they changed the format of the software. So, and it's actually the least important, by the way. What's most important with this kind of stuff is that it's moving quickly. That's the thing that's most important. There were 121 names. That is a lot. I'm going to try to change this. I'm going to go to price. I'm going to put a price, and it's got to be higher than $10. And I know a lot of people don't like that, but I got to tell you, when the stocks are under $10 a share, it does not take a whole lot. Like an $8 stock only has to go down 80 cents. It's down 10%. Does that make sense? So that's basically what I'm trying to do, is weed these out. And by the way, the big mutual funds, they don't like buying those penny stocks either. And we need those big boys with the big money to make those stocks move. So I'll cover this again next week. I'm just going to go down through the list here really quickly. This is the firm. Actually, I bought a mattress from, I think, Purple Mattress. Yeah, and Purple's publicly traded. I own its stock. I've been getting my butt kicked on that one for a couple of years now. The talk about crazy. It was up a lot, and I never sold it, and I just forgot about it. By the way, and if I'm going to forget about it, the chances of somebody else forgetting about it is pretty good. So that's one of the reasons you don't want to do. You don't want to have a ton of your money invested this way, but it does help. It helps me a lot over the years. So a firm came up on the list, and it's right around $24. Got a pretty decent price to sales ratio, and that's one of the things I'm really cognizant of when I'm looking at stocks to buy. What is the valuation? Now here's a new company. I don't even know who these guys are or what they do. They came out, went down right away, blasted up. Now they've been kind of channeling sideways, if you know what that means. If not, don't worry about it. But it was up about 18% on Friday on a huge spike in volume, and the share price is only $13. So I'm going to check mark that one and go back and see what kind of technology they provide. And the fact that it's a new company often helps. A lot of times people get really excited about new companies, and it's a psychological thing. So here's a biotech. Wow. If you guys, whoa, this is funny. This stock came public in 2019 at $9, goes all the way down to 60 cents. Well, right now it's at 15.81, and that the drops were pretty significant. The climb back up was astronomical. It's the name of this company is Calbeta Bio, and it's a biotech. And that's not unusual if you know about biotech stocks for it to be moving like that. And it happens all the time. So I would say, yeah, that's worth another look. I'll go check it out and see what they are doing. This is another one I like. It's a Central Garden and Pet Company. They make pet foods, package it. And I'm not sure what the garden part is. I forgot about that. I've seen this company a long time ago. The symbol is actually Cent. CENT, and it's got a nice looking chart. When you look at that chart, if you pull up the chart on it, you're going to see that it went up a lot, went up almost 10% yesterday, or last trading day rather, and it closed right off of its high price for the day, and the volume was 7 or 8 times the average daily volume, and this stock was significantly higher back in 2021. Was actually about 26% higher back 2 years ago now. So what that means is I'm going to go back and take another look at that. And they've got another class of shares, by the way, that also came up on the scan. So I'll take another look at that one and see what happens there. Diebold must have been bought out by somebody because its share price was way down, and these are the ones that kill you. So looks like maybe they're headed off, for the graveyard for old publicly traded companies. And it's down to 25 cents a share, and then opens the next one day. It opens. What is that price? The price opened at $25.38. Can you imagine? Oh, if you had purchased that a day ahead of time, that's just you'd probably be retired right now. Or you'd think you're a professional and you go out and try to do it again and lose all that money. It happens a lot. I shouldn't even be laughing about it because it does happen a lot. But anyway, so here's another good looking chart. This is a big triangle. It just broke above resistance. Volume's about 5 or 6 times heavier than average daily volume. Closed up into top 25% of the days. Trading range, and the company's called Donnelley Financial Solutions. DFIN is the symbol. $51.71. Now, I like trading these type of stocks, especially since they don't charge commissions anymore. Because you buy a stock that's under $10, and that stock, if that stock drops $1, it's a massive chunk of your change. Okay? If a $50 stock drops $1, 2%. You see what I'm saying? You want to try to, if you're gonna do this, and by the way, folks, the reason I'm doing this is I used to manage money this way. It's gotten too hard because I have too many clients, and the turnover, the speed is so fast. There's no way I could keep up with that across a large number of accounts. And quite frankly, with some of the funds that I'm using, they're beating me anyway. So the only reason I'm doing it is because I like doing it. That's the only reason anybody should be doing this, because the chances of you beating every single exchange-traded fund out there, especially those that concentrate on sales growth and profitability, they're probably going to beat you. Yeah, in the long run, they're probably going to beat you, because I wasn't the only one that knew all this stuff. In fact, a lot of companies know a lot more than I do to this day. And there's really not much they know that is worthwhile knowing. And I can show you what that is if you ever want to or have a conversation about it. But anyway, let's go. I'm just going down through. Oops, I guess I'm going to have to wait. This is called Oil Dry Corporation of America. This stock's run a long way. If I had bought that one, I would only put a 7% stop on it, $65 a share. Symbol is ODC. Anyway, I only have a couple of seconds here before I have to cut out. They're kicking me off. So you've been listening to Bill Bullington. I'm here every Saturday morning from 11 to noon. You can go to my website, bullingtoncapital.com, if you want to reach out to me. And I appreciate the time you spent with me today. Have a good weekend. Good luck. Good invest.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.